Hello, ladies and gentlemen, and welcome back. Have you ever wondered what corporate insiders are doing right now in the markets? Well, in today's video, we discuss that concept. We also talk about number one, the first level of the squeeze was reached in the last 24 hours and it rejected. Was there a good trade there? We'll take a look at that a little bit later. But specifically now, we talk about whether we can continue to find rallies throughout this earnings season. The big one is just around the corner. Apple, Amazon, Shopify. This shows us consumer discretionary and whether the market can hold up. And so far, it doesn't look like good. Google's down, Microsoft's down, and Meta is in the dumpster fire pit. If you haven't heard the news, we'll be talking about that because it is shocking what just happened to Meta. At 1 minute, it was $140. A few seconds later, we're going back down all the way downtown to almost $100 a stock. Yep, it was a massive swing after the hours today in markets, but it wouldn't look like it on the surface. Stay tuned as we cover everything right now. See you soon. Well, welcome back everybody to the Daily Show where we talk about stocks, commodities, and cryptos. We've got a big show here today discussing, of course, the lead indicators, the key levels we should be watching, but we'll start off with the news and the macro data. Facebook earnings were frankly terrible, cut in half, in fact, and the stock got destroyed in after hours, falling to more than a 6-year low, or almost a 6-year low. Now, deep dark within the paperwork, it was not all bad. Well, it was bad for Facebook, but it wasn't necessarily bad for some other companies. Meta is now to be seen spending as much as $39 billion in 2023, and specifically planned tech binges. It was great news for Nvidia, one of our favorite stocks here, probably in my top 3 to 5 stocks in the market. And that went up around 4% after hours. Again, it could be a good long tailwind kind of earnings for Nvidia in the future if you like that stock. So what are central banks doing around the world? I thought it might be interesting to have a look at the 12 months of all of the main kind of economies here and what they've been doing. And specifically, just to look at Japan again. Remember, guys, be very careful with anything to do with Japan right now. We've got a very fixed rate. They are not moving and they have not pivoted on their policy. So at this point, the yens are very scary, as are the bonds in the Japanese market. They are very, very terrifying, and always you should be concerned about those. Have a look at them on the charts. You'll see intervention all over the place, and I don't think it's over just yet. So a bevy of big gains. What can the market tell us? Well, over the last 10 trading days, we've had a lot of 1% plus days. That's pretty cool. We obviously had that big sell-off that led on to the squeeze, and we've been talking about this squeeze occurring, and we've hit our first target, which was 38.80. Now, what happens? Well, the SP 500, after it gets these types of 10 days with at least 5 plus 1 days, tends to have like a good little bit of the next week, followed by some nasty shorting that definitely occurs, or at least tends to occur. And that shorting can come through. So is that consistent with this time of year? Well, we're looking for squeeze into short. So therefore, it could certainly be a great statistic. Do we have some other reasons? Well, here's the McClellan oscillator, and you could see again, when we've gone from negatives to positives really quickly, what happens? Not so good. Actually worse than a coin flip in terms of positive gains over all these data points in the previous history. That's something that's definitely interesting. What about if we start changing up the stats a little bit here? Well, again, showing us the next couple of weeks could get a little bit fruity, a little bit nasty in the markets. And if we keep squeezing, there's even more chance, especially next week, that we start to dump off. And ahead of something like Amazon and Apple earnings, you've got to be aware that this is the type of stats that start to play out. Now, corporate insiders, what do they think about the market? Well, frankly, they don't look on the time frame of a few days to a few weeks. Of course, they're looking long term. Interestingly enough, a new low has been formed from corporate insider sells. That means they're not selling. Corporate insiders, they don't sell at these lows. They say, you know what, maybe I'll be accumulating. In fact, in terms of optimism here, corporate insider buy-sell ratio has actually improved. And you can see there's excessive pessimism, but overall, we're moving into a level where we're not necessarily saying a huge amount of sells. We're actually seeing a decent amount of purchasing going on. So if we have a look through the stats, actually around 3 months to 1 year later, once we see readings like this, we tend to be positive. Again, could it be a sign that even though we may have further falls to happen, that overall the insiders are right once again. They don't tend to be very wrong when we see these readings. You can see they bought a lot in 2020, they bought a lot over here in 2016, and they went crazy bonkers back in 2012. They can see under the hood. It tends to be good if you're an investor to have a look at least and acknowledge what they're doing. Conditional seasonality for the S&P 500. Why do we believe this rally could happen? Well, if we take just bear markets on average, we'll notice that there are rallies, and they often kind of get rejected around the start of November. Now, does that fully fit into this concept of these weaknesses coming? It could do so. And if we see markets start to get ballistic here over the next couple of days, let's say Amazon and Apple report okay and the market goes up, then we need to be concerned about a potential sell. We've already hit, remember, the first target. So will we hit the second and the third ones and then kind of stack the odds in our favor towards actually being kind of bearish? This could be very, very interesting just around the corner. Another thing that's traditionally kind of shown us the turn points has been realistically this, and that is that we've seen dumb money often outpacing smart money. So we've kind of seen them interject with each other. Now, a few people are bringing up this one over here, where we didn't see dumb money and smart money interject, but we end up getting a flash crash followed by a rally. There are some similarities to do with this period and this period that we'll look at later on in today's video. Remember, what we saw over here was we had kind of like a doubling bottom, followed by a rally, followed by effectively an SOS or some kind of consolidation, and then the market fell over. Could we be entering back into a period like that? We need to consider it, and we need to be aware, because then if the market goes down, we still have a very big disconnect between smart and dumb. If we then rally and we see dumb go above smart, well, of course, that's a good signal that we're probably hitting the peak. If we keep running though, remember, this is overall a super downtrend we will discuss later in today's video. What about earnings beat data? Well, it's 70%. So outside of the big companies, the big tech, it's not too bad. 70% is pretty normal. Beats 379, misses 164. Pretty much a consistent normal earnings period. That not saying that expectations are high, but it's still coming in with beats, and that's kind of good. Meta was shocking as we saw, but now we enter into one of the biggest ones. Apple, Amazon, Shopify. There's no doubt that's big. I'd also be looking at Exxon and Chevron because both of these stocks have been absolutely pumping recently, and they're not really pumping with oil. They're pumping just because I guess people think they're going to make tons of profit. So these two here will be very interesting returns. In fact, the back end of this week, as we often suspected, holds, I believe, the key for the next couple of weeks of market movement. If they disappoint, it could get very bloody very quickly. Let's talk about solar and talk about the markets in general. Was it a good day? Well, defensives weren't necessarily leading. We had healthcare and staples in the middle of the pack. We again had solar just absolutely smashing it through the session. In fact, it was up 6% at one point. Gold stocks did well. Biotech continues a sneaky kind of recovery over the last couple of days. Now, for anyone that's been following the VIX, you would know that the VIX has been very low in 2022. We usually see VIX go really high during fearful times. Now, if you look at a corresponding period from 2006 to 2009, you'll notice that the VIX did something very similar. It stayed low, spiking multiple times throughout the year. Then it went down, and then we saw an incredible rally of fear. Now, this is what some people, especially the bear case, is showing for 2022. They're saying basically the back end, maybe into December, maybe November, because the VIX is dropping right now, there could be an incredible spike, an incredible fear that acts like a capitulation in these markets. It very well could be. It's something that we're definitely considering. S&P 500 stocks above the 50-day moving average. I kind of wanted it to get up to here. So I'd like to see further squeezing, frankly, in the market. We'll talk about both scenarios moving forward. It's a good one, though, to find cheap price and to find expensive price. This is a good little code to have on your TradingView platforms. And we'll move over here to the VIX. What's going on in the VIX? Well, it keeps dropping. Consistent with what we thought. Maybe we go down to a 24, then we spike. But certainly we're dropping, and that's, exactly what you want to see. What about yields? Well, again, if yields keep going down, and let's say they break to the downside, that's great news for the stock market. Regardless of earnings, that's the type of thing the stock market wants to see. I don't believe in the whole pivot concept at the moment or anything like that, but What I do think is that if yields go underneath here, the market's telling us that it's prepared to potentially go a little bit higher because, of course, it's all about inflation and yields at this point. It doesn't really matter which one you're looking at. US 10 years obviously significantly dropped off in terms of spread differential. The 2 years gone off, and I'll just quickly show you guys where we're at now. So as of April, we're only at a 4.8% instead of 5%. So it's dropped 2.2% in recent days. And even if the yields kind of float round like this, as long as they don't spike higher, the market generally tends to get optimistic. That's the way it is. High yield bonds, not too bad. Almost got a new high here. We obviously wicked the high but didn't close it. Again, we'd like to see high yield bonds come with the stock market in its recovery. So they're a little bit behind. They should have already made a new high based on what we saw in stocks, but at least they're moving on up. That's good news. Dollar index, is it failing? Well, it's fallen through. Consistent with what we've been discussing, dollar has been the weaker trade. Everyone else was very bullish on it. Of course, we saw the trend change around, and this is where we got that really strong supply that came through. It weakened, and it's weakened since that point. Now, we've reached what I would call a fairly important zone, and we're not quite there just yet, but we've gone to this previous daily kind of close low, which sits right there, and we've started to potentially form base. Now, around this area, we had previous demand that broke the structure and moved up. This is going to be a pretty important zone for dollar. And of course, if dollar does recover, then stocks will go down traditionally. So it's at support, at demand. If we end up just doing this and we go lower, once that happens, we go down to 108. Again, that would allow further squeezes for the stock market. Watch the US dollar right now, guys. It's going to be super important. And at this stage, we don't know it's actually done anything good that's bullish. It's just at the key level that we've talked about. This is one of probably the most important zone at the moment, and a break below these wicks should open up this 108, and that would be great for stock buyers out there. Euro US dollar, what's it telling us? Well, it's stopping in the middle of nowhere. So if we're using this as a lead, similar to what we did in the previous session where we had this, although it's on a vertical train all the way up, squeezing out, no doubt, many players out there, it probably is wanting to go here. And if that happens, you're probably going to see a new low in the DXY. This seems to be the next big supply zone, the big resistance for the euro. And I'm just going to pop this in while we're doing the recording. Let me tell you guys what's happening with retail sentiment. Look at this. I want you to pause the video right now. How many retail traders do you think predominantly are short the euro right now? If you type it in the room, you'd be probably horrified. 80% short. Yeah, that's right. 80% short, getting crushed. Don't go against the trend unless you see a real reason to do so. Let's have a look in the 15 minutes. Is there a reason to do so yet? Not really. It's making a series of higher highs and higher lows. I mean, that's what it's doing. Higher peaks, higher troughs, higher peaks, higher troughs. There was a little short in here you could have gotten in the previous session, but regardless, it's just continuously strong up. Now, if it breaks underneath here, you could say, okay, temporarily it might come back to that 102 level. But overall, the trend is up for the euro. I wouldn't fight it just at this stage. Let's move over to gold. Strong moves here in gold. 1669, very nice. Daily, again, I've got like some set alerts up here at 1683. Let's have a look at the 2 hour. Very nice kind of turnaround here. It's done the right types of things to find bullish pressure, and it's kind of pointing towards getting towards that 1680. I mean, gold looks decent. I mean, you got to say it looks decent. It's a few days now, it's been decent. We've liked it here. We've specifically liked it very much here in the last video. And I just go with the trend at this stage. These pullbacks are consistent. If you look under the hood, it looks okay. Hopefully we can continue to find buyers and push into the 1680 area. That would be a nice area for gold to get to. US oil breaks through our resistance, our supply zone. 1, 2, 3, 4. Came up a fifth time, tried to find sellers, broke up. That was all she wrote. That was the end of the sell-off in oil, and now it's rallying. Now, where does oil rally to? You would think it probably goes towards 90. And again, this could be good for stocks, just specifically because if we're seeing weakness in the dollar, strength in gold, strength in oil, blah, 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 that's probably the right thing that we do want to see at this stage. Now, I still believe in demand destruction inside of oil, and I still think longer term it goes down. However, at this stage, this is a nice kind of sequence of events, and based on those dailies there, you can see kind of those rallies coming through. It was just too much pressure for that supply, and once it broke through, it was always going to be a pretty okay bullish side trade. So this is where things get crazy. Now, I'm not sure if we can get the 15-minute data here. I don't think I've got the after hours, but I just wanted to show you what actually happened. So the news result came out, and Meta went up to $140 a stock. It then proceeded to dump and closed at about 104. That is literally almost a 40% switch from top to bottom on the downside. That's a pretty wild move. That's one of the wildest moves I've seen in a while in post-market. Why I wanted to bring it up is because it shows you how risky the markets are right now if you don't practice risk management. Now, what's 100? Well, it's getting close to psychological levels. It's underneath at this point, this 114. It's underneath this 106. I don't know where it's going to open exactly. But yeah, these kind of zones, if they swing them, people are going to say, oh, should I buy the dip? It's always a risky trade. You've got to have a system built around this concept. You've also got another one that sits around 90 as well if it comes down here. And it looks like, at least in the next couple of earnings, that potentially Facebook or Meta or whatever they call it now could be continuing to find quite a lot of weakness. It is getting towards fairly cheap numbers. But yeah, it's a tough one, guys. Tough one out there. Let's have a look at Tesla. Tesla continues to find okay bulls. Ended the day 1% up. It's still kind of trapped within this zone. If the market does go bullish, though, you'd expect Tesla to try to fill the gap at least to 238. I still feel like at one point we'll probably reach 180 for Tesla. It just seems like it will happen. What about Apple? So Apple continued to come up and it's bouncing down. Maybe moving back down to the 147 before earnings. This is the problem. If this stock doesn't represent a good number, or at least a number that the street likes, Apple could go right back down, and that will push the market, as we know, significantly lower. So it's all really down to this one. I wouldn't really gamble too much on it. I don't think you have that much edge to guess. But of course, some of you may feel like you do. Amazon, something similar. It actually had a really bad looking close on it ahead of the earnings, which is only one day away. No one was feeling too good on this compared to Apple. They were feeling better on Apple. I'd like to see it break past this 122 area and then move forward, kind of creating an inverse head and shoulders, left shoulder, head, right shoulder. That'd be a great result. Don't know what's going to happen yet, but realistically, this shop and Apple, I believe, hold a lot of the key. And the main reason why is because when you think about the market, you've got to consider XLY versus XLP. XLY is the American consumer. That's effectively discretionary purchasing. And XLP is staples. Notice the market has been going down on this. So that's not what you want to see through a recovery. It's really quite bad. It's not really the type of thing that I like to see. Usually with a recovery, you want it to be robust and you want consumer discretionary coming with you and beating out staples. That shows the market is not being defensive and not rotating. This time around, it's not quite doing that. A little bit weird. Nvidia, of course, is rallying after hours due to the news. We're going back into kind of that resistancy period or supply period between that 136, 140. I still would be careful in here, even though I think Nvidia is a pretty good stock. We're going back into that key previous seller area. The DAX, what's it done? Well, mission accomplished. It's reached the trend line. So for anyone that was bullish on the DAX, congrats. I guess you got to the location. Now, traditionally, this has been a good level so far this year of turnarounds in the market. The market has dropped off this zone. But if we look at the Dow's not quite there yet. I mean, these are the 1, 2, 3, 4 kind of highs. Do we get to this supply first? I would certainly like to see so. So this would be pretty cool to get back in here. And I think the Dow may be worthwhile, looking at. Apple, of course, Amazon, these types of things will make big moves here, specifically Apple. And if it does end up having a good return, I could easily see us bulling straight in here to the 3,300 within the next couple of sessions. Let's move over to the US 2000. You'll notice this is a more robust market. Again, the smaller caps are actually pulling this market along. It's not Microsoft. It's not Google. It's certainly not Meta. It's the smaller companies that are actually finding nice buying and stronger returns. And this looks okay. I mean, it's the right type of thing. We've broken through. We've continued to rally higher. Don't think we can get too much edge here on the Russell. So we'll move over to the US 100. We're still looking at a potential case of 12,000 here. But notice it didn't make a higher high previously and it dumped thanks to Meta. So the Nasdaq isn't exactly finding a huge amount of strength. Look how much weaker this market is. It still hasn't got through this area of problems. The Nasdaq is not pulling this market along. It's the other sectors, the older sectors actually, that are holding it up. So I don't think there's too much edge here on the Nasdaq, but the US 500, now we could turn into the lollipop of alerts. In fact, I'll just use the SPX quickly just to show everybody. So the general gist here is this is what we've had consistently with these squeezes. We've come up so far with these squeezes and we've gone bullish and then we've sold off. Now there was 2 other times, or specifically this time though, that we need to pay some attention to, because what happened here is from the bottom to the recovery, we moved around 9.4%. Now, if we take that move and we bring it over to here, we very similar kind of percent hitting the first area. And what happened was we consolidated there. Let's say that did happen, and then we dumped massively. Now we've got to be very careful what happens here. First target has been reached. That is, it's come back to that swings previous supply zone and could show some weakness here. The idea still would be we find just a series of higher highs and higher lows, or higher peaks and higher troughs, and we slowly push to fill this gap, hit this area, and that would be awesome. I mean, that would be sweet if it came up here. But we don't know what earnings is going to do, so we have to be open to this mindset. Let's scroll down into the S&P 500. So first up, all these things kind of push towards here. We've got the inverse head and shoulders. You've got, so that's the take profit of that kind of thing. You've got a series of higher peaks and higher troughs coming through. And that's the key. Higher peaks and higher troughs. That's what we want. We don't want any lower peaks and lower troughs. That would be temporary weakness. So after the earnings announcement, the market did drop. It's recovering here. And you'll notice we had that previous alert set over here. We didn't take it out. We certainly haven't taken this one. So good. That's a higher trough. Nice. That's a higher trough. Nice. Now we have a new higher trough. What price is that? Well, it's 38.13. We do not want this to be taken. If this happens, then we could be looking at further, like some short-term shorts or weakness in line with those data stats. So ideally, we would see continuous pushes here. We'd move up to the 39.20. If we make a series of higher peaks and higher troughs, we just keep going until that really breaks the sequence. And of course, we'll be updating the ideas here on the charts, here on the daily channel that we always do. So make sure you subscribe for that type of stuff. Which levels are we looking towards? Well, we still want to see whether we can get 39.20, sweep these highs and potentially find weakness there. We'll be ready if we do see. Remember, patience, react in these cases. And we also have some potential resistance here. Now, if we get through those zones, it could be smooth sailing, or should be smooth sailing probably to 4,100 after that point. This was an aggressive sell-off. It could be an aggressive rally. So the squeeze is on. There are similarities to that previous time. If we start to just do this, I think we have to be kind of concerned, especially if it breaks to the new low. That's when things could get very, very scary. But if we do this and then we break up, well, cool, 4,100. I would love to see that. 3 key levels, lots of opportunity, lots of risk. Facebook has been done. Apple and Amazon are next. Let's have a look at the options. What do they tell us? Well, they basically just say we shouldn't be going above 395 this week. I'm sure many of you would be pretty happy if we got that. That's where the calls have been open for the Friday. Let's scroll out to the next week now and go towards the 4th and what's happening there. So if we go into November, we begin the first week, 4th is the Friday, and at this point, max pain is 375. So I'd probably consider to see some big options changes. If the market is going to go bullish, you'll want it to suck, well, at least bearish in the long term, you'll want it to suck in a lot of calls. There should be more calls and less puts. That's what we want to have. Lots and lots and lots of people going bullish. I'm not quite sure we're there just yet. And that's something we'll be looking at. Bitcoin, pretty good breakout. Really nice above these highs. You've still got to be cautious, but at this point, you would think buyers should come in off these demand zones. And if we do move down to these areas, we'd like to see Bitcoin get back to around 22,000 to 22,200. A nice breakout here over the last 24 hours. If this market does this, like takes that low and then pulls back, that's when, again, it would be the same as the stock market. We'd have to be prepared for serious fall-offs at that area because this would be a trap and a false move. So you got to be careful, be nimble and fast out there, guys. If you enjoy our content, make sure to subscribe, smash that like button, and remember, there's still news for the week ahead. So Thursday, we have the ECB press conference. That's going to be big. We've got the earnings reports. That's going to be big. The Bank of Japan press conference coming in Friday and the outlook report. That's huge. And then the core PCE price index on Friday at 8:30 a.m. New York time. So it's still a massive week of news. The next 2 days should really dictate what's going on here and whether the market wants to squeeze or it wants to fall. We do have trigger points. Let's find out whether we can get some of those. Thanks so much for watching. Subscribe, smash the like button. See you in the next one. Bye for now.